Hi guys, welcome back to Father and Son Investing. We're going to talk about Matterport again today. We're going to talk about share float of Matterport and the share dilution of Matterport. To do that, we're going to talk about first the lockup stocks, then the earnout shares. Then we'll talk about the warrants that were recently exercised and how that affects the dilution. We'll talk about Enview, which was recently acquired, and the stocks that were paid to Enview for that and how that affects dilution. Is that good or bad with that one? And finally, we're going to talk about the Employee Award Incentive Plan and the number of shares that will come into play if those shares get executed as well. So let's get to it. All right, share dilution, just what is it that we're talking about with that? Well, we're talking about essentially a piece of the pie. How much of a piece of the pie does each owner have, each owner of those shares, if new shares come about? So we have here just a rather simple demonstration of this. On the left, there is a pie in which there are three pieces. One piece is 50% and the other two pieces are 25% of the pie. Now a company goes and issues an additional 200 shares. What happens to those pieces of the pie? Well, they still own the same number of shares, right? The founder still has 400 shares in this example, but now his percentage of the pie has gone down from 50% to 40%. And that is what happens when new shares come about in a company. First, we're going to turn to the Simply Wall Street website to help us see what the percentage of shares are for the ownership breakdown, essentially, for Matterport. So we're going to see that the general public has 56% of the shares, roughly 142 million. Then we're going to see that venture capital is going to have about 18%. Institutions are going to gobble up about 16%. And individual insiders are going to have about 10%. Now, according to the agreement of the merger, these individual insider shares were locked up for 180 days after the merger. Now, the merger took place on July 22nd. In a previous video, I went ahead and used an online calendar, and we saw that adding 180 days to July 22nd was going to get us to January 18th. Now, these almost 26 million shares are already accounted for within the total number of shares of Matterport. So if we use the Yahoo Finance website and we want to go to the share statistics, we're going to see a number here that says float. This is the number of shares that are actually going to be available to the public. But we see that shares outstanding is far more than the float. That's because some of these are locked up by institutions, by insiders, by venture capital. So what will happen when these lockout shares become available? Well, the float is going to go up. That means that although the total number of shares won't change, the number of shares available to the public will increase. And as those shares increase, if the demand is less than the number of shares that come out, supply and demand, there's going to be a bigger supply, less demand, that price is going to come down. All right, so in this instance, there's no share dilution that's going to take place, but we can see that the price potentially can come down when these lockout shares become available. All right, guys, if you don't pay attention to anything in this video, please pay attention to this because I made a mistake on my previous videos in regard to the date that the earnout shares will become available. Now, I have talked about January 18th, and that is an important date still in this process because it talks about any time during the 5-year period beginning on the 180th day following the closing of the merger. That is January 18th. What I didn't recognize fully was that the period begins on the 180th day. I can only say that in my brain, I transferred over the way that the warrants worked, which were kind of retroactive to the date. And in this case, it isn't retroactive. It begins on that 180th day. So what you need to know is that all of these tranches down here with their prices, $13, $15.50, etc., all the way up to $25.50, will not yet be earned. They haven't been earned out yet. Now, let's just look at the price of Matterport. As of the close on Friday, it was $13.34. So essentially, if the price remains at this level for at least 10 days of the next 30 trading days, 3.91 million shares will become available as earnout shares. Now, these are earnout shares. What is that? It's just strictly a bonus that gets paid to the legacy holders of Matterport stock. There's no additional capital being gained by Matterport in this process. Now that is going to dilute the ownership interests of the existing shareholders. I owe a shout out to two people who watched my previous video and pointed this out to me. I'm going to put their names on the screen so that I don't mispronounce anything, but a big thanks to both of them. The take-home point that I want you to remember is that each time the stock price reaches one of those certain tranche levels, it's going to add another 3.91 million shares to the float. All right, so just how big of a deal is that? Well, if we look at the 10-day average volume, we're talking about 9.13 million shares. So it's just about 1/3 of the total daily volume is suddenly going to get added to the float. You can see how that could significantly affect your share price. Now, I've had someone ask the question, why wouldn't they just wait to sell their shares until they become worth more? And certainly there may be people who do that. But certainly there may be some people who say, I paid nothing for these shares and they're now suddenly worth $13 per share. Why would I not sell them? Now let's move on to some other recent events. Let's talk about the warrants and how those also dilute the share price. Let's talk about that. Now, anytime a company issues shares for less than the going rate, the market price of the stock, that is going to do two things. Number one, obviously, it's going to dilute the shares, but number two, it's going to bring the price down. Why is that? Well, imagine there are people who are paying less than what the market price is for the stock. Now, what stands a good chance of happening when somebody buys a stock for less than its current price? Well, there's a good chance they're going to turn around and sell those shares. What is that going to do? Well, it's going to sell-off. Now, it may not be a sharp sell-off like this, but certainly there will be a sell-off if those additional shares go up for sale. When that sell-off happens, of course, the price comes down. Lastly, I just want to talk about Enview's acquisition, which was completed on January 5th. Now, part of that was for $35.5 million in cash, and part of that was for 1.59 million in shares of Matterport Class A common stock. Again, new stock gets issued, that is going to dilute the shares. But in this case, that may not necessarily be a bad thing. Now, what could make this, even though it dilutes the shares, how could it help with the earnings per share, which is oftentimes what we care most about, is how much money is the company making per share that I hold? Well, if Enview can increase Matterport's revenue greater than the amount that the shares are worth, then obviously that can add to the earnings per share. So in this case, even though it's going to dilute it, it may not necessarily have a negative effect on the earnings per share. Now, here's one other funny trick that we need to be aware of when the next quarterly report comes about. Because Matterport is actually still losing money, if you think about the math, one way to make your earnings per share loss less is to increase the number of shares when you are losing money. So we might see that the earnings per share loss improves on the quarterly report, but we're going to keep share dilution that has been going on in mind when that happens. Yes, indeed, share dilution has been going on. Let me show you what I'm talking about. All right, this comes from the quarterly report that came out in November. This is as of September 30, 2021 then. And the balance of shares as of September 30, 2021 was 242 million shares. Now, if we flip back over to the Yahoo Finance website, we're going to see that the shares outstanding listed as of today are 251 million shares. So already we've gone from 242 million up to 251 million shares since September 30, 2021. We're going to finish this out about dilution with this letter that comes from Latham & Watkins regarding Matterport and its stock-based compensation. Its 2021 Incentive Award Plan. Now, this letter enumerates a number of shares that Matterport can issue in regards to incentive award plans and stock-based compensation. So we see here that there are almost 24 million shares of common stock that are issuable under Matterport 2021 Incentive Award Plan. We'll also see that a little more than 7 million shares are available as an employee stock purchase plan. They will get some money for those. We see that there are more than 44 million shares with options to purchase under a previous Matterport stock incentive plan from 2011. And we'll see that there's almost another 4 million shares, also restricted stock units that are granted under that 2011 plan. So we're still looking at potentially a lot more dilution that can take place without even having a secondary public offering, just from this incentive award plan. So keep that in mind as well. All right, so based on all of these factors that I've discussed with you today, we talked about the lockup shares, we talked about the earnout shares, we talked about the warrants. By the way, the date for those warrants expired on January 14th, and they really expected pretty much all of those warrants to be exercised. And we also talked about the Enview acquisition and the shares there and how that will dilute it, but potentially not necessarily ruin the earnings per share. And lastly, we just talked about the incentive award plan and a whole bunch of shares that are in there that can dilute the stock. All right, what does all that add up to? To me, that adds up to a decrease in the stock price coming January 18th. I hope all of this was helpful for you. If it was, please give us a thumbs up. We really need that for the YouTube algorithm. Share this with somebody, a young person. Share it with another Matterport investor that you might know. As always, make investing a family affair. And until next time, enjoy your investing.